We are looking at an Australian dollar, US dollar 60-minute chart. And once again, the days are separated by these vertical lines. We have price has been rallying from 71.20 to 73.20 over the period of a few days, which is a nice move for the Australian dollar as its ranges are smaller. We have, you see how price here has stalled out at this high and retraced to support, or has formed support, made another attempt at the high and retraced back to support again. Now we're moving in, we've consolidated into a new trading day. And as we watch price move up, we see price move, we're watching it move about 40 pips, 50 pips towards the new high here. And if you're trading the attempt at the high, you see how price has moved up towards the high, has poked through, and has stalled. If for some reason, let's look back in time, doesn't seem to be a very distinguished level of resistance and support. Bringing us back into real time now. As price breaks through, if you're going to trade short as the market attempts to make new highs, you want to trade it as close to this as possible to this high here. You see how this high here is 73.28. Now if you trade this at 73.28 or 27 or 26, somewhere in that neighborhood, or even if you even anticipate a slip through to account for some stop running, then it's important to have your order there, because your stop can be closer. So if you have a 20 pip stop, you've got a little bit of room in case this thing slips through, price slips through a little bit further. And if price just bounces, then you have enough room for some profit. So the difference between this high here of 32 and the low on the initial bounce is 98. We're at 34 pips bounce so far. A 34 pip bounce from the high, but of course you have to account for spread, 4 pip spread, plus you're probably not going to trade it right at the high. You may trade it lower or even at 20. So still gave you it gave you about 32 pips to make something, to make 32 pips to make 20. So that's about 66% of this move to take profit from. Now price is rallying. Now look what happens. Price slips through again. So if you didn't take profit on the first down leg, if you had an entry that was as close to this high as possible, as much as you can get away with, hoping to still get filled, then as this one ran through to a high of 42, your stop would likely have been higher and you would still be in the trade. If you were not in the trade on this attempt, then you certainly should be in the trade. Now that this starts to trade below this key level, it clearly, there's a failure here, and a failure here. Now we see a nice move down, and if you traded it here, you want to take your first profit before 80. Your first profit should be on the Australian dollar, should be at 20 pips because of the narrow ranges, but should definitely be before support, and then you can maybe carry some forward in case it decides to trend or move, take on a large move. Now price comes back up. It is testing this level of support, which is now resistance, and it's just going to rest there until volatility picks up in the new session. Now we're going through a Friday. This is a weekend scenario here. So we're just consolidating through the weekend. Now at this vertical line, the weekend is over and volatility is picking up. This is the height of London session, and price is making attempts. Again, attempts at new highs here. Now the high is up here. And you see it's a pretty steady trend. We are late in the session now, getting late into the session, so it failed to make a new high during the height of London and the New York sessions here. Now we're getting late into the session, so it's highly unlikely that we will make a new high as we move into the Asian session. This vertical line generally represents the height of the Asian session. Okay? And we failed to make new highs. This is our short-term trend line, and that trend line gets broken. You see this level of support here. Right here was an economic report which caused a bit of volatility in the market. This is our level of support which we will draw in. What do we see now? Right here is a potential left shoulder. This is a potential head. Look what happens when it fails to make a new high. There was a trade there because this happened at the height of Asian session. Less than 50% of the time will it succeed in making new highs during an Asian session. We break through the trend line, step 1. We go back to the last level of support, step 2. Now we are looking for what? We're looking for a potential right shoulder to form, in which case we will look for that right shoulder to form. We will pull our Fibonacci's from the high to the low. This is our 38, 50, 62, 79% retracement. The right shoulder is at approximately the 62% retracement level. And this level could be a good area to make a short trade somewhere around the, I would say anywhere between, let me show you the numbers here, anywhere between 73.25 and 73.32. I would make a trade anywhere between the 62 and the 79% retracement levels. And we've come up to the 62% retracement now. We are getting later in the session, which is good. So if it makes an attempt at the highs, it's unlikely to hold. That way we can still, if price decides simply to consolidate in this area, then we can still take some profit if it just consolidates and then continues to rally. But if we get a good entry here on a nice retracement, then if this is a head and shoulders at a previous high, then this could be a critical starting point for a potentially strong down move. Now we'll simply watch price as we're still bullish in this on this up leg now. And as we get late in the session, I would like to trade it somewhere in or around here if possible, which would be our I would trade it somewhere around 20, let's say 73.25 is a good trade, somewhere right around here. Now we get a bounce that goes as low as 15, just a 10 pip bounce. Now look what happens during Asia. Now when Asia opens, of course, so does the Australian market, so volatility picks up for the Australian session, and we got a move right up here through 73.30. We traded it short at 25. The high here is 35, so it's moved 10 pips in our disfavor. The nice thing about trading it here at 73.25 is our stop can still be at 45 to 50, which is only a 20 to 25 pip stop. It gives us some room because, again, Asia is unlikely to make new highs here. it gets immediately rejected and goes all the way down to 73.10. If we trade it short at 73.25, we're at 73.10. We want to try and take some profit before our neckline, which is more or less right here at 7,300. Price moves all the way up. It's a 20 pip. Look at this 20 pip spike up to 30 again, putting us from 12 or 13 pips in the positive to a few pips in the negative on that one spike. Hopefully it doesn't shake you out of your position. Trust in your tools, trust the formation. Remember, we've got a key high over here. And then price moves down to our 127% extension. Now we see a rally to the neckline. Okay, it slips 10 pips through the neckline, and then it moves down 50 pips to the 162% extension, and then look at the spike, 20 pip spike, and then continues to move down to 72.40. Some volatile legs, but again, the price action seems sharp here, but it's actually quite low in comparison to other currencies. When you think of it, although this candlestick looks like a very sharp wick, it's really only a 20 pip spike. And then on a 20 pip spike on this side, this was likely the result of, by looking at it, it looks like a result of a U.S. economic report that had occurred at that time. So trade short, the right shoulder equivalent to the left shoulder, between the 62 and the 79 in this case, during Asian session, unlikely to make new highs, enough room to have a safe protective stop, not too large. Again, it should always be relative to your equity management, not exceeding 1.5%. Then a nice move down, a leg up, testing the neckline, and then another leg down for a nice move of about 80 pips.